Hey traders, Kill here. Welcome back to another Trading Edge video. Today I have two trades I want to take a look at, both trend continuation trading opportunities, one that has an advanced pattern formation in it as well. But before we get started, I wanted to follow up on a trade that we've been following all week. And if you guys are new to the Trading Edge, if you just signed up on a trial membership, then understand that this is a daily video that Jason Greystone and myself put out to you guys, giving you an idea of what trades to keep on your radar. I guess what trades are on our radar that we feel are worth watching. It's also a chance to kind of show you examples of what we're teaching you in the course and show you how it relates to the live markets. But especially as a swing trader, right? Understand that there aren't going to be a lot of good moves in the market. We had a great discussion in our live trading room about that today, and I'm probably going to upload a video to YouTube about that this weekend, about the importance of staying organized. But understand that there aren't going to be a lot of quality moves in the market. And what you'll find in this video is that we're going to consistently ID a certain opportunity, and then we're going to follow it and adjust it throughout the week. And if you guys remember on Tuesday's Trading Edge video, right, we took a look at the Aussie dollar. I showed you guys a trend continuation, or excuse me, a counter trend structure trade that I couldn't take. And I said, hey, keep an eye on the Aussie Canada. We're going up in the structure, right? This is going to be a good opportunity for a short. Right? We then got our shorting opportunity. Yesterday, Jason Greystone came in and did a nice little lesson showing you how he got involved in the trade. And today I want to follow through one more time with that pair because it follows up on a discussion we had in the live room. In a live room session earlier this week, we had a good lesson on trailing stops. And for you guys that are new, trailing stops is essentially the process of adjusting your stop loss down as price action moves. So at first it's reducing risk, and then it ends up being locking in more and more profit, right? So as price goes in your direction, your stop loss follows it and trails. And the question that the trader asked was, Akil, if I trail stops, right, I'm going to be more profitable with my system, correct? And I said, well, that's not the case. Now, in theory, yes, but we don't know that for sure. And I think the trader was asking, do I need the back test? And I said, yes, you do, because you don't know if it's going to be profitable. And it ended up being a head scratcher for many of our traders. Like, okay, reducing risk, locking in profit, how can that not be more profitable? And it's all about how you trail stops, right? If you trail stops too tight, right, you can actually sabotage yourself. And here's a great example. Well, let's put it this way first. There's a pro and a con to everything. So let's start with trailing stops too tight. If you trail stops too tight, right, the pro, so the benefit is you reduce risk and then you lock in profit quicker. So if the market were to make a move like this, if the market were to make a move and reverse all the way, you would be stopped out for trail stops. You would make some profit, where the person that didn't trail their stops, they would be stopped out for break even or whatever their normal risk was. The con side of it, right? So the negative side is that, well, you don't give the market enough room to breathe. And when you don't give the market enough room to breathe, you can sometimes get taken out by what's called the chop. Now, the pro and con of trailing loosely as well, right? The pro is, right, you avoid the chop. You give the market enough room to breathe so you have time to catch the full move if it happens. However, if the market does fully reverse, well, you don't lock in any profit. So I don't want to say one is better than the other, but it's important to know what you're doing, know why you're doing it, and then be consistent with doing it. And here's a good example. If someone trailed their stops too soon. Now, I personally trail using structure, and this is why it's so important to learn structure. I know you guys are tired of us always saying, learn how to read a price chart, learn how to read a price chart, but I swear, guys, it is the core of everything you would ever want to do trading, right? Whether you want to be an indicator-based trader that creates a momentum-based trading system, whether you want to be a price action and structured trader, no matter what you want to achieve on the chart, it all starts with understanding price and understanding movement. And that's why we put such an emphasis on doing it. Yes, it may be boring at the beginning. You're just drawing lines on your chart. But without that solid foundation, it's going to be hard for you to build any type of consistency in your trading or any type of profitable strategy for that matter of fact. And it plays in with trailing stops as well. Now, I personally like the trail stops based on structure. You can use indicators as well. But here's a good example, right? If someone doesn't know how to read a price chart, here's what they can easily do, right? So we're coming up an upward, we're coming off an upward move here. Price comes to our previous level of resistance, right? We play around a little bit, we retest resistance, we finally break down to the downside, giving us that rotation and trend right here. We know it's a rotation and trend because we have rules to identify when a previous trend is violated. We then get a move up here, right? We then come down, we give a little spike right here. And this is where I believe Jason Greystone took his targets, right? Now, for someone that is maybe too aggressive with trailing their stops, or maybe just they don't understand how to read a price chart, you can easily make the case that, hey, you know what? They're gonna move their stop loss and they're gonna trail right here. Why? Because, well, price spiked that low, right? So let's get right above this little structure hump. However, if you're familiar with rules on, or at least the way we teach it, how to read a price chart, you'll know that this spike doesn't do anything with our overall trend. Yeah, it's a big move, but it immediately got rejected. It doesn't change how we look at the market. And a trader that's trailing too aggressively, well, guess what happens on the retracement? Boom, they're stopped out. And yeah, they're stopped out. They make some money, right? Most of you kind of have heard the saying, you can't go broke taking profits, right? Now, I'll touch on that in a little bit because you can. But most of you say, hey, it's not a big deal. You know what? I got stopped out. I still made some money. Big deal. My account's bigger than what it was before. For the person that's trailing more loosely, right? They never adjusted their stop until, not here, until we get down here. So they gave the market room to breathe. They avoided kind of the noise that happened, especially during a news event. And now they're locking in profit at a much lower level. Now, going back to the can't go broke taking profits, here's the issue, right? So trader A took their profits off right here. Trader B, I don't know if this is going to hit targets or not. Hopefully it does. Trader B would have taken their full profit. You'll notice that trader A only took about a quarter of the total profit projection that they thought they would get. So basically, they only took 25% of what they were supposed to get off a trade, right? Now, this goes back to the you can't go broke taking profits, right? If you have a solid trading strategy, every trading strategy has an expectancy model, and your expectancy model is basically looking at your win rate, and then your average win and your average loss, and putting all that together and saying that, yes, I will be profitable if I do this consistently, right? If my win rate is 50%, for example, right? 50% win rate to keep it simple, and my average win is 20 pips, and my average loss is 10 pips, then, right, you're going to have a profitable system because you win 50% of the time. When you win more than what you lose when you lose, right? Simple math. Now, here's the problem, right? If you're taking a quarter off of your potential profit, that average win, which was 20, right? What if you do this enough, and again, you don't test it so you don't know, you do this enough and it goes down to 10, or let's say it goes down to 8. Well, you may not even notice it, but now you're hitting at a 50% rate. Your average win is 8, your average loss is 10. Now you're actually trading a strategy that doesn't have a positive expectancy, and you're trading something that loses money. Now, again, this is a very remedial example. I'm not saying that this is going to be the case because there are so many other moving parts that go into it. But the point is you need to test it. You need to make sure that trailing stops that aggressively isn't actually sabotaging your system. And I say that because I know some of you guys are going to be like, well, Keel, what if this, what if that, what if I do this, what if I do that? Basic remedial example. Again, there are a lot more moving parts when you actually do this in real life. I just want to keep it basic so I don't confuse anyone. But the point is you need to test it to make sure that what you're doing isn't hurting your system more than it's helping it. And of course, when you do something, you have to be consistent in the way you do it. Don't trail at structure one way, but then trail at a parabolic SAR the next time, and then trail at a 5 pip random number the next time. Be consistent with what you're doing, because if you remember anything from my last YouTube video, consistent analysis plus consistent execution equals consistent profit. So I wanted to get that out the way. Again, I was going to show you a video on the Aussie Canada, but Greystone already did that, already showed you how profitable this trade was, and hopefully this will hit profits for me as well. I'm one in, one out. Hopefully I can get about 70 pips from this bad boy. But let's move on to the other pairs that I want to show you today. And we're going to start on the Euro Yen. These are going to be two trend continuation opportunities. I'm already 10 minutes in, so I'm going to try to make this as quick as possible. But Euro Yen, this was a pair we talked about in the live room, mainly looking at this area right here. And this pattern formation is called an inverted head and shoulders. And when I say inverted head and shoulders, I don't mean like it's inverted as a head and shoulders bottom. Those are two different things, right? A head and shoulders bottom is going to look like this. It's still going to be a regular head and shoulders. It just comes at the bottom of your market in a bear trend versus one that comes at the top. This is an inverted head and shoulders, as you can see, right? The shoulder is here. The neckline is kind of the opposite way. Imagine if you were to take your head and put it inside your body. Maybe, I don't know. And then you have, again, your shoulder, your neckline here in your right shoulder. And what I was telling traders earlier is that if we can break through that line, there's a good chance that we can continue lower. And if we continue lower, I think we can go down to this level right here, which is about 127.77. And another good way to think about this, we see this with ascending triangles as well, is kind of think about like a bouncing ball, right? And here's what I mean as far as how price action looks. For you guys that took the foundation course, which is I called it the foundation course, a study on price action, where we took kind of a different look at price action. I'm a little bit crazy if you haven't found that out by now. Think about it like a bouncing ball, right? You drop a bouncing ball off of a building, and the first bounce is going to be your highest bounce, and then after that, right, the bounces get less and less and less. You can view momentum the same way in the market like this, right? Price action falls, we get a big retracement, a big bullish retracement showing some buying pressure. We come back down to retest that level, and then each retracement after that is smaller and smaller, meaning we see less and less buying pressure. And as we see less and less buying pressure, right, as the buyers are less interested in trying to push the market up, or maybe not even less interested, they're unable to push the market up even higher, it's only a matter of time before we see that breakout to the downside, before the buyers give up and say, you know what, this level, not going to be it. Let's live to fight another day. Let's wait to the next level. So it's no surprise when you see formations like this, when we get a break there, you see a massive breakout. And it has to do with some other things as well. For example, if not to get too complicated, but if you have buyers that are looking to buy right here, right, and then they see the market start to break out, what type of orders do they have in, right? As the market goes against them, they get scared, they get nervous, they want to get out of their trade. If they're buying, they have sell stop orders in. So those sell stop orders are triggered along with sellers that are also new sellers that are looking to enter. So you have sellers that are selling, you have buyers that are selling, you have a flood of sell orders flush into the market, and you see big momentum moves like that. I just overcomplicated things for no reason, but that's kind of a different way of looking at it as well. The point is, if I digress, the point is we're looking for a breakout to the downside, and going through that IPDE process we always talk about: identify, predict, decide, execute. If we were to identify what's going on, we identify a lower low, lower close. If we were to predict what's going on, we predict a continuation to the downside. The next part of our prediction is asking ourselves, if price action is going to go lower, then where is price action likely to go to? And again, that 127.77 level, boom, Fibonacci extension there as well. What do you know? That's a good level to look for a potential move to. You can see you have a 127 and a 1618 Fibonacci extension and inversion there as well. So what you want to have on your radar for tomorrow, even for today, is, and we can go down to the 60-minute, take a better look at this, is just looking for your trend continuation opportunity. And two ways you can look for: one could be another breakout. We may see a high and tight flag here. We may see some type of wedge and looking for a breakout of that pattern. Or of course, your classic pullback trade, where you're looking for a pullback in the previous structure and then a chance to short and take it lower. So one more, pound yen's another similar situation. And this should be familiar to you guys as well. We've been stalking this all week, especially the pound pairs. But pound yen on the daily, there we go. Pound yen on the daily had a lower low, lower close. right? You can see previous structure lows were broken here. Same type of deal here. However, we actually have an advanced pattern formation forming here as well. So for you guys that are pattern traders, check this out, right? You have, if we go down, let's go down to the 4 hour, we have a potential bearish bat formation forming, right? We take out my crypto tool. We look at this level right here. This is going to be my X to A, swing high to swing low, my A to B, my B to C, right down here. Come on, lock in there. This candle's kind of small. But if price action rallies up, we're looking at a decompletion right there, and you're looking at a potential pattern trade. Now, this would be one of those examples where you have a few options. You can, A, take this as strictly an advanced pattern formation, nothing wrong with that. You can B, use the pattern formation as an entry reason for a trend continuation trade, meaning you look to buy it, sell it. I keep saying buy. Look to sell it here at the D point and use that as your entry reason for a pullback trade, expecting continuation lower. Or you can do a little bit of both. You can kind of do, have the best of both worlds. You can take the bat pattern. You can take targets off, your normal targets off for the bat pattern, and then leave an extra position on for that potential continuation down, right? And that's a technique that we teach when you find advanced pattern formations that come within bigger trend continuation opportunities. So a lot today. I hope you guys enjoyed. Trial members, I know you guys are loving it. Thank you for all the messages. I'm glad you're finding this to be valuable. It's only $1, so hopefully it's worth your $1. But I'm glad you're finding both the live rooms and these daily Trading Edge videos to be valuable, along with being on our chat platform. I'm looking at the chat right now. I just got a message from Sergio that says, "Hey, thanks guys, happy to be connected." Let me just bring this down for you guys. Boom. Come on, baby. Where are you at, Sergio? Thanks, guys. Happy to be connected. I'm currently in the UK. Just started trading live 2 weeks ago. About a month ago, we started allowing our trial members to be on the chat, and it's been great because it works out for both people, right? Our trial members get the support needed. They kind of run into like-minded individuals. They get a reality check that, hey, other people have struggled with trading as well. I'm not alone, and they kind of get put on the right track as far as this is what I should be doing. This is what I shouldn't be doing. And at the same time, for our premium members, it holds them accountable, right? The best way to learn is to teach, right? The best way to learn is to teach. So by having newer traders on the platform, right, that are asking questions, hey, how do I know if this is this? How do I do that? It really allows the premium members to kind of go back through their mental Rolodex of trading terms and whatnot, and be able to take those ideas and teach it to our newer traders. And when doing that, they're continuing to learn themselves. So I'm just excited with how everything's going, man. Tier 1 trading was an adventure. It happened quick, but I truly believe if you do things with the right people, if you do things for the right reason, you will be successful. There's no way. If you do things with the right people, if you do things for the right reasons, if you put the right amount of work into it, you will be successful. And this has been a massive success. I couldn't be any happier. All right, guys, I lied. I could be happier. Why? Because we just locked in profits, baby. I'm excited, guys. I'll see you guys tomorrow in the accountability session. I'm excited to hear some more stories. And until next time, plan your trade your plan. You guys have a great one. Hey guys, I hope you enjoyed today's video. If you did, can you please do me a big favor? Hit that like button, share on social media, and if you're brand new to this channel, make sure you subscribe. I know a lot of you guys watch this on a regular basis. Just hit that subscribe button. It takes a second and it helps me out massively. It also ensures that you don't miss the next video. Also, for you guys who are interested in learning more about price action, I know I mentioned that it's the core of everything trading related. Make sure you take advantage of our free trial on the website. Just go to www.tier1trading.com/14-day-trial. I'll put a link in the description box below as well, but it gets you onto our site. It lets you interact with our community. It allows you access to our live trading rooms. It allows you access to our accountability sessions and access to download our trading software, and it also gives you access to our Emergence training course, which is a massive training course that teaches you the basics of how to read a price chart, how to develop a strategy, trading psychology, and a whole bunch of other gems. So all it does is cost you $1. There's no strings attached. There's no automatic rebuild. There's no kind of under the table slimy salesman type deal. We just want to give you some education. So I'll see you guys on the platform. And until next time, plan your trade, trade your plan. Take care.